Hello, everyone, and a very warm welcome to the sixth edition of ETCIO. Now, when we talk about digital connectivity, integration and the resulting modernization becomes a prerequisite. Mindful of this fact, we have organized a panel discussion titled The Successful Story of Digital Integration. In this session, you will hear from some of the digital leaders and industry experts on how they are embracing technologies, collaboration, and integration. I'm Sneha Jha, editor of ETCIO, and your moderator for this session. And I'm very pleased to welcome our illustrious set of panelists. Manishi Chatterjee, GMIT, IDBI Bank. Abhay Johorey, Head Digital Strategy, ICICI Bank, and Rubal Sahni, Regional Director, ServiceNow. Gentlemen, welcome to today's panel discussion. Thank you for taking out the time to be with us. Now, before we plunge headlong into the discussion, I thought we'd set a bit of context with you here. For the past couple of years, the banking industry has seen an orbit-shifting innovation as it has transitioned from banking as a product to banking as a platform and banking as a lifestyle. But this requires banks to become an agile organization with digital capabilities in their organizational DNA and with reflexes to react swiftly to the changing competitive landscape. All this is possible if and only if banks modernize their platforms and processes. Without digital integration and modernization, banks cannot be ready for whatever is next. With that as the premise, let me kickstart this discussion with Mr. Chatterjee. Mr. Chatterjee, banks deal with a lot of technical debt due to the legacy framework. But when it comes to technical debt, you are either managing it or mismanaging it. How can banks create a well-defined strategy, intent, and rationale behind dealing with tech debt so they are able to handle digital integration and transformation more effectively and efficiently?
To me, this technical depth, I feel it is somewhat something which is by default is happening. Maybe from initial stage it is happening. See, we can define the technical depths. For example, suppose if you have to deliver some product and the time is very crucial for delivering that, then it requires some kind of agility in the development and to deliver it in production. Maybe that may not be the actual right way of coding or right way of going for the agile coding and all. But because of the paucity of the time and the need from the management to deliver it, sometimes this has to be done. So I will define this technical depths are of three types. One is which is intentional, deliberate. Second, which might be accidental. But third is something which is actually creating or creeping a problem in the system. So like suppose if for a very crude example, I will give it. Suppose I have to run a VB script, Visual Basic script. And if I have to do it this in Excel 2013, this is a macro script I have to run. If I do it in Office 365, which is a more modern and more better platform, it may not work in actual when I go in production. But for the need of the hour, because we have to have some deadline, we might go it in for the Excel 2013 and develop, and then we can move it in production. But the challenge comes if it is not planned. Now, when it is unplanned, it remains into that with the old technology and we are going into the technical depth. But if it is a planned technical depth, that okay, if it is the urgency of the time and we have to go for it, then of course we can do it now in the production. But later on, when the time permits or when my team knows that this is a older technology or we had actually done it in a not an efficient way, then it's come back and do it the proper coding. So that kind of planned activity or planned technical depth is okay, welcome. But it is not always possible, because in a scenario like banking, where we are actually working with so many applications, which is maybe at the time when these concepts are not there, these are these kind of programmings have been done, which is maybe the legacy systems and all, which are working as of now, but the need of the time is that we should relook at that, but that is also not very easy task. So that is why this technical depth nowadays, this concept has come up. So it is a relooking of the whole things that's being taken. And I think many banks are actually looking at this. But it is true, this technical depth is one which one has to look at it, one has to plan it. If any bit rot kind of scenario is there, then we have to actually address it. So that's
Right.
my takeaway on the technical depth.
Right. So, Mr. Chatterjee, you spoke about the way that technical debt gets created. You spoke about the intentional technical debt and the unintentional debt, and how if we have intentional technical debt, how can we work around it and try and solve that problem. Mr. Johorey, I'd like your take on the next question. Now, digital transformation in BFSI involves integration of all kinds, integration of platforms, data, analytics, emerging technologies into all areas of operations. Now, it's more than just a technological upgrade. It requires a cultural change. How do you make that happen? Because getting the cultural equation right and not creating a major disruption is one of the key imperatives for banks. So how do you rethink all aspects of risk and reward while attempting such a large scale integration within the bank?
Yeah, yeah, good question. See, two things. I mean, there's one approach that actually applies to my bank, which is ICICI Bank, and so I'm going to just reply in generic terms as to how would companies, look at this. So there are two things there. Yeah, one is that I think most bankers, most old age firms now explicitly recognize that there is a need for change. Yeah, so that's half the battle. Yeah, I mean, you're just figuring out that what we have is not adequate, that we need to do more. Yeah, so once that realization happens, then the question is, what do you do next? What are the aspects of culture that you do necessarily change? Yeah, and I would say that's half the battle. Yeah, the next half is, what do you do? What do you change? Yeah, so there's one aspect, which is that there has to be a mindset of experimentation, hypothesis, and inference. Yeah, now sometimes what we think is, there is a strategy which is laid down in stone and you have 5 years to execute it and things will not change. Yeah, that world is now giving away to you. Form a hypothesis, it's a well-informed hypothesis, then you do experiment, and then you are definitely sure that it will work. Yeah, now that is something that does not come very easily to old age kind of industries. So this whole experimentation mindset is a big deal. There's enough and more technology to support it, but there needs to be a mindset that, yes, I need to do this. Yeah, so that's one aspect, one vector of culture that needs to get changed. Yeah, the second vector is again, because you so long operated in an industry that did not change that often, the environment was not that rapidly changing as it is now, you also need to take a lot of decisions which are data based. Yeah, earlier a lot of it was gut and intuition, which is formed by years of actually being in the same place, and therefore you subconsciously recognize that this was a good credit, bad credit, this could lead to a fraud, this may not lead to a fraud, and therefore you missed out on some opportunities and you over engineered on some sets. Yeah, so now I think the paradigm changes to that you have to have a lot more which is data based. Again, lot of technologies that can support this. The trick is, when you actually are confronted with a piece of data that does not agree to your long withstand with old beliefs. Yeah, and that is when you need more data to just absolutely confirm to yourself. Yeah, so there's that disquieting piece of evidence that just doesn't seem to sit well. So that's a cultural change as well. And I would say the third change, and that really doesn't apply, to where I work currently, but there is a large emphasis now on customer experience. Yeah, and when we say experience, we're actually saying three things simultaneously. We're saying that it should be easy to do, It should be effective, which is whatever you set out to do, you should actually finish it. And it should result in a positive emotion. Yeah. Now, I mean, if you look at a relationship that you have with your phone or with your social media, company, you tend to love them. Yeah. People tend not to love their banks. Yeah. So that has to change. Is certainly customer experience becomes center stage. Again, lot of technologies that need to be, brought to bear, and a lot of non-technical stuff as well. Good UX, UI, polished aesthetic surfaces, journeys that are very easy to comprehend. The fact that it's omni-channel, you can pick up where you left off in any one channel. So that's another aspect. So I would say these three aspects of culture tend to change a lot more when you are undergoing digital transformations. Yeah. Correct. Then there's this thing about moving from a top down only to from edge to the center. When things are changing very rapidly, the people at the edge are the first to figure out that something has changed, that this will work, this will not work, which means a lot more empowerment to the front end, folks who are actually dealing with customers, folks who are actually taking calls on the field. Yeah. That's another aspect of culture that needs to change, but that's largely settled now. It's the other three that seem to face a lot more barriers.
Right. So, Mr. Johorey, you broke down the equation and explained each facet of it very beautifully. You spoke about starting with the hypothesis, experiment, and inference vectors of culture change. You also spoke about data and other allied emerging technologies that help drive business decisions and insights. You spoke about customer experience, where we bring in the angle of convenience to the customer, effective transaction with the customer, and also bringing in that positive emotion, that wow factor for the customer, that customer delight angle. And you also spoke about this driving this change from to bring in that front end empowerment, driving it from edge to the center. So you really helped us understand the cultural piece of it. Now I'd like to move on to Rubal. Rubal, you interact with a lot of your customers in the banking industry. Now when it comes to integration in banks, it brings operational risk due to the transformation and the complexity and the potential disruption that it could lead to in the day-to-day operations of the bank. So what, according to you, banks should do to avoid the pitfalls, and what are some of the typical challenges that banks face around integration? What have you been hearing from your customers?
Oh, thank you, Sneha. And I must like to start with congratulating Mr. Abhay and Mr. Chatterjee about taking their banks to the next level. When I sit in global forums and I talk to leaders from banks all across, unanimously they all agree that banks in India are much ahead of the banks of some of the very large developed economies as well. There a lot of tasks still need to be performed where people have to go to the bank in person and get it done. But today all the banks have achieved that in the country, where you can get things done on the click of a button, either through mobile app or on their portals, right? And even through the IVR as well, right? So that is one great feat. So we are already in a very good state, but at the same time, there is a lot of disruption which is happening. There could be some revenue which we can pass on to some newer players who are coming and disrupting a lot of spaces here. Coming back to the question of yours, which is about operational resilience, I would want to first pick up on where Mr. Abhay left and Mr. Chatterjee also said that technical debt would be there, because if suppose today I take some decisions on the technology and I don't change it for next 10 years, after 10 years that forward call which I'm taking today will become a technical debt. So that is bound to happen, right? But as Mr. Abhay mentioned, that we have to be at least having a mindset where we are looking at what can change, what cannot change, and which all are my low-hanging fruits, which will have maximum impact, to be focused on, right? Now, the approach which we are, kind of understanding from a lot of customers in this industry, whether in India or even outside, is that, they are looking at a platform of platforms, right? To sit on top of the system of records. Now, system of records, when I say, it could be your core banking system, it could be your ERP, it could be your, CRM. This is, which is maintaining your customer data, which is maintaining your transactions, which is maintaining your core banking. But today the need of the hour is to focus on customer experience, operational resilience. So a platform which has got risk and security. When I say risk, it is not just about IT risk, it is also about the entire enterprise risk.
Risk.
So entire enterprise risk and security embedded into the platform with all the modern technologies, whether it is AI, ML, conversational AI, the intuitive experience to the end customers and our employees, the right data models which are compliant to the banking framework to be available, so that you can pass on the empowerment to the hands of the people in the field. When a customer is sitting and is trying to make a decision in your bank branch, which might be 3,000 kilometers away from your main corporate office, the person there should not be ringing a phone back to the central branch and asking, can I do this? Can I not do this? So we have to make them, empowered, whether it is in the contact center or the persons who are there in the branch. Now, the second facet of that is operational risk and intelligence. Let me pick up on IT risk first. Now, how traditionally people have been managing risk is they will first create kind of, a small data lake where, we'll bring in data from maybe our IT systems. And when I say IT system, it would be multiples of them. It could be my central help desk, it could be my monitoring systems, it could be some of the financial systems. And then I'm trying to see, where is the vulnerability. But by the time we are working on that data set is already at the best, at least a week old. So we are actually not reporting on top of the real data. And there is where, again, going back to the time of, again, to the point of platform of platforms, where everything is coming in the real time in an integrated fashion, where we are not changing the data models which are compliant to the banking industry. And then we are doing IT risk on top of it, and then the enterprise risk. And there is where, we'll be compliant to the expectations from RBI of continuous compliance monitoring. Policy risk, policy automation, all of those things can be happen when we are having that approach of platform of platforms. Thank you.
Thanks, Rubal. You raised some very interesting points, and I'd like to delve a little deeper into this. And I'll take this question to Mr. Chatterjee. Mr. Chatterjee, I'd like to explore this with you a little further because operational resiliency at an enterprise level in the bank needs the backbone of an end-to-end platform which has common services, data model, and observability. How do you bring that change internally within your bank?
What Mr. Rubal has actually touched upon is a very, that's a very pertinent point. So, first of all, I will touch on that operational resiliency is the way we had actually encountered the issues in the last 2 years because of this pandemic part and all this. It was something like, that the challenge was that how to continue with the banking or how to continue with any business. That was the first challenge which happened, which actually came to the mind of the business entrepreneurs, that, okay, how it is going to be, addressed. But very surprisingly and very vital say that it is a very, it's a technology which has actually been adopted in these last 2 years, and it is came out that, okay, this operational resiliency can be addressed on that front, that, okay, business continuity at least is addressed. Even in our bank also, the moment that thing came that, okay, the pandemic erupted, we came out with the fact that, okay, now we'd have to do something, some technology we have to embrace. Through that, my business should be continued. And because of that, we tried for this all, that platforms like Citrix and Palo Alto and all this, we have gone into that remote working and all this we implemented, and it went on very well. It went on very well. At least the business has continued. But that it also erupted in some other things in the in the banking industry, that apart from this, also you have to think of the actual integrated model wherein the digital banking and everything works with more security, with a more risk control in place. These are the challenges which are now actually coming into the picture, and that too with a robust digital model. Now, for this, you know that at least these are not very easy for the banks who are actually so many of legacy systems, and we do have. And also at the same time, you don't have that liberty of going to the cloud, because cloud is something which is not, as of now, all are very, very optimistic that, okay, we can take my customers' data to the cloud. So within this kind of, bindness, we have to have a digital model, which is something which we can have it on-prem. At the same time, which cannot be, that if we have to think of that any crisis or any kind of pandemic or something, it next erupts, my digital model should work seamlessly. So for this, my backbone of my infrastructure, like Rubal has touched upon the data lake kind of scenario that one has to go for. So my interaction in the integration between the other platforms, other applications is smooth. And for that, the applications or the application front which the companies are having, which the banks are having, which is also a monolithic kind of applications, which are not very conducive of going for integration kind of scenario. So this right approach for any banks, or at least in my bank, what I am taking is that we are first of all addressing this monolithic applications, how to go for a scenario where is microservice enabled, which should be. So for that, we are gearing up that. So I think this holistic approach for the banks will be the right way that we should go for a robust kind of environment, which will be actually addressing these kind of scenarios in future if it comes. And also in other way that, okay, even for the normal process, normal environment also, these kind of platforms which is integrated, robust, secured, should cater to the customer in a very, very user-friendly and secure.
Right, right. So, Mr. Johorey, you spoke about a couple of things when it comes to operational resilience. You spoke about platforms, you spoke about the infrastructure, building blocks, data, and a lot of different things around monolithic architecture. Mr. Johorey, several banks have adopted ESB technologies to integrate different banking systems with each other. Now, this became a single point of failure for a lot of banks. In addition to this, it also transformed from an integration platform to a platform containing a lot of business logic. So, how can banks tackle some of these challenges, and how can agile integration transform the traditional ESP methodology to a decentralized approach, thereby also enabling agility and the rapid development of APIs and integration services?
Yeah, yeah. It's a deeply technical question, so I will try and respond it as best I can. So there are two paradigms here, right? One is that ultimately APIs is the only way things get done. Yeah, that is the new paradigm. Yeah. Now there are APIs and there are microservices, and there are patterns to writing these. So the first thing I would say is to untangle the single point of failure and incremental load that it costs is to follow a paradigm which is called the internet architecture, which is also called CQRS, which is command query response segregation. Yeah. So that's one thing that can be done. The second thing is to recognize that there is a lot of north-south traffic, but in a new modern application, there's a lot of east-west traffic as well. Yeah. So what you have to do is you need three separate sets. Yeah. You need a service mesh, you need an event hub, and you need a API gateway, a classic, enterprise service, kind of a set. Now, what happens is, when do you use which kind of pattern? Yeah, the first one is if the microservices which are calling each other are synchronous, yeah, which is largely east-west, then you use a service mesh. Yeah, if microservices are calling each other and are asynchronous, yeah, again east-west traffic but asynchronous, then you use something which is called an event hub. Yeah, and if microservices are calling APIs or vice versa and synchronous, again you do a service mesh. So when you use the API gateway is when there is an incoming call to any service within the bank ecosystem. Yeah. So essentially it boils down to good architecture. Yeah, I mean, if you have a good architecture and you execute it flawlessly, you can pretty much control all of this. Now, underlying a lot of this stuff around resilience is also the cloud. What cloud does is two things. One is that it helps you scale on demand. Yeah, that's a fabulous thing to get. Yeah, and by scaling I mean the horizontal scaling as well as vertical scaling, and you get that on demand. The second thing that you get is also a lot of self-healing capabilities. Yeah, if there is a degradation, because there are limits even to a cloud setup, it very gracefully degrades. Yeah, I mean, there's enough ample warning for you to recover stuff and things like that. So therefore, one is your architecture of how APIs are written, how a service mesh, event hub, and an API gateway is used in tandem. Yeah. The second thing is to obviously move a lot of stuff onto the cloud. And on cloud, again, I think it's important to not venture into a multi-cloud right at the word go, especially if you're taking baby steps, is center your effort on one cloud, master it well. And by mastery, I mean there is a cost angle to it, there's a performance angle to it, there's a security angle to it, there's a manageability angle to it. Yeah, you need to have skills which actually help you do that. Yeah, so I think between moving to the cloud and writing good API patterns, half the battle has been won. The last thing I would say is that you can have applications which can run on the cloud, and you can have applications which are natively built for the cloud. Yeah, there's a massive difference between the two. Applications which can run on the cloud but are not native is the worst thing to do. You are better off actually running them on-prem. Yeah, you have to, because see, when you're looking at features like scaling, when you're looking at features like self-healing, your applications have to exploit those features. If that is not the case, then you are, getting into some trouble. Yeah. So that's I think from an architecture point of view, these are the two things that need to be done. The other thing, I mean, again, this is more of a design and a philosophical perspective, is a lot of your technical debt is stored in your legacy, because in the good old times, the paradigm was one monolithic structure. Yeah, that's where the bank lived. Now, what you can do is you can strip that off into 5 separate system sets. The first one is the system of experience. That's your browser, that's your app, that's your CRM. That's where all the federated APIs to big tech goes. Yeah, and that's where customers actually sense it. That's where customers feel it. That's where they experience it. Yeah, that's very important. You can modernize it at word go, because the legacy tech is very, very bad at that. Yeah. The second system is systems of intelligence. Yeah, that's where your business schools stay. That's where your raw data stays. That's where your metadata, your glossary, your profiles, your reference data, your customer data. You can actually put that up again in a very, very modern architecture. Yeah, systems of intelligence. Then the 2 new systems. One is systems of orchestration. We briefly talked about the service mesh, event hub, API sets. So that's a part as to how systems talk to each other and how systems talk to ecosystem outside the firewall as well. And then very soon we're going to land ourselves with system of things. Yeah, 5G is around the corner, IoT is around the corner, and especially with embedded finance, objects will also start taking financial decisions. Yeah, so there has to be a system that needs to do that, which leaves the system of records, where to buy time, your legacy can restrict its role to just that. Yeah, that's where accounting happens. That's where your ledgers are. That's where your payment ultimately has to go to. And that gives you time to, score some quick wins with the environment at large. It helps you develop a roadmap to start modernizing it. And ultimately, you have to modernize that piece as well. But you can take your time over it. You can be a little more deliberate about it. Unlike big tech, we can't break things and fix things, right? I mean, we run a fiduciary, capability where there is a lot of trust, that relies on the customer. So you actually do it very, very deliberately. You do it very, very economically. You balance off performance and cost, and all of that. So that's I think the way to get away from any bottleneck. Live with legacy for a little more time, and then come out to a completely cloud-based, microservices, API pattern-based, kind of a stuff. All of it powered by good systems of intelligence. Yeah. That's where the world is headed.
Right. So, Mr. Johorey, you gave me a very comprehensive answer talking about the technology aspects of it and also the strategy aspects. You spoke about the need for a good architecture, APIs, the service mesh, event hub, and also the API gateways. You also gave me a futuristic outlook on where things are headed. So, I'd like to now move on to Mr. Chatterjee. Mr. Chatterjee, in your previous response, you spoke about the steps that you're taking towards microservices. Now, how is your bank looking at DevOps and microservices to speed up development, to become more agile, to speed up your go live and iterations?
So actually, it's a journey. What I was mentioning, it's a journey, and this journey will not be something which we can achieve it in a day. So as I was mentioning that our that we had started with the API kind of scenario, API integration, and we had also started with the ESB kind of integration. So API and ESB in my implementation stage, and with this, we will be actually going for, uh, uh, in fact, the microservices we are also into the way. But for the COTS kind of scenario application, which is, off the shelf, which is not possible to take it to the that kind of scenario of microservices. That anyway, as Mr. Johorey also said, that it is better to keep it in a wherever it is. But going forward, the DevOps, which is also in my pipeline, and it is already under scrutiny of searching for the right kind of vendor. This DevOps is, we will be actually, starting with the CICD kind of environment where we will actually have those right set of frameworks, wherein my systems is just ready for cloud move kind of scenario whenever my that gateway opens, and then my applications will now, as an integrated way, we will be in the cloud. We will go for that other next step, which will be with the Kubernetes and those kind of scenario we will go. So this way, we feel that in our bank we will be able to actually encash the right kind of infrastructure with a hybrid cloud kind of scenario in future.
Right, right. Now, Rubal, you heard Mr. Johorey and also Mr. Chatterjee. Now, banks today need a horizontal scale, a polyglot architecture. They also need agility, smart digital experiences, and an omni-channel integration sophistication. So, how do you think these things can help banks? What are some of the key advantages banks can derive from better, effective, and more efficient digital integration? And how does ServiceNow play a role here?
Oh, thank you, Sneha. I guess Mr. Chatterjee, Mr. Johorey put it excellently, what their strategies are, how to break the larger problem into sub problems, and then, win the smaller battles rather than just winning the war at once, right? That's my takeaway, from their talk. Uh, so, ServiceNow as a platform has been today used by 1,000+ global financial services customers, right? And they use it not only to first, solve the IT issues or define their IT strategy, but they also use it for managing their enterprise risk, elevating the customer experiences, and also integrating the entire bank, the front office, middle office, and back office. And once, our customers are able to do that, they see a very lean way of operations, which brings operational resilience. And at the same time, they are able to easily integrate their CI/CD tool chain using our modules, where we let the developers do what they are supposed to do in their mini and micro teams. But at the organization level, at the global level, the banks are able to monitor the quality parameters, that we are able to put a right governance framework on top of it. And then from there, we can also ensure whether the projects are going to go live at the right time or not, and what needs to be done today to ensure that we meet those timelines. One important point on observability. A lot of banks used to be, 15 years back, used to be very early adopters of application performance monitoring solutions, right? Because the applications are directly related to the revenue, right? So, but all those applications were monolithic applications at that time. But today, either all of those applications or some components of those applications, at least on the customer experience point of view, are microservices, end of the day. But those APM solutions today were written pre-2013. All these microservices architectures have come after 2013. So the agents which used to sit on your DB layer, on your applications, are not able to figure out how the microservices mesh is created. And because of that, the outages happen. Even though we have all the investments have gone into, your APM solutions, and they're not able to predict those outages. And there's where the need of observability comes into picture. ServiceNow has a solution by name Lightstep, which is written after 2013, and it is purpose built for microservices architecture of solutions. Having that said, a big change needs to be done, and not only for FSI customers, but for globally for every organization, and they're working towards it. The change has to be looked at one single change in the organization, not infra change separately and the application change separately. Today, what is happening is infra change is managed separately, the process of it, and the application change is managed separately. That is the first thing where, I guess we have to solve in the DevOps methodology in our enterprises. It's easier said than done, but I guess somewhere that cultural shift has to happen. Second, as I covered on observability space, is very important, especially for the revenue linked applications. We have to bring in solutions of modern age, which are written after 2013, right? And third thing is, we have to look at, again, a platform which is integrating and bringing in those, low-hanging fruits of innovation quickly, so that we can win smaller battles rather than winning the entire war in one go. Connecting our front office, middle office, and back office into one platform, which has got security and compliance built into it, and which is cloud ready, readily available on SaaS, and more than 1,000+ customers across the globe are already using it.
Right.
Thank you.
Thanks, Rubal. Now, Mr. Johorey, with initiatives such as platform banking, distributed integration, open banking, and many others, banks have been exploring solutions that will modernize their legacy system. How does your bank capitalize on some of these initiatives?
Yeah. So, again, chance favors the prepared mind. So I think we started doing these things much before they became fashionable, quote unquote. So yeah, I mean, initially it just starts off, by getting the browser and the apps out. But I think the big deal is if you've written them intelligently and you got a full API stack, that does those, it's very easy to enforce an omni-channel by using elements of the APIs and federating them, and getting the big tech and the fintech partners to start using it as well. So initially we used to call it invisible banking. Now we call it embedded banking, which is that you are embedded in the lifestyle that actually the big tech or the other fintech or large folks like Zomato or Amazon do. So whether it's our cards or whether it's our loan solutions, they're all embedded inside. So I think the trick is to and I'm repeating myself, have the architecture right. Because if you build a house in a way that is meant for expansion later on, you don't have to dismantle it and start from scratch all over again. Yeah, you can evolve out, and while the cloud and the analytics capabilities are now reaching peak time, very soon you will have the entire blockchain sets, the quantum sets, the 5G sets also just around the corner. And that does not mean that you suddenly dismantle all the stuff you've done and start from scratch again, because you should be prepared for that. And that's the important message is, chance will favor the prepared mind. Get your architecture right. Devolve your monolith into at least 5 separate systems, and each system can then evolve independently of the others, but it's still connected, and it's connected by a fabric which is again very, very well thought through. There is stuff that is asynchronous, there's stuff that's synchronous, there's stuff that is still batch, there's stuff that has to be near real time. Yeah, how do you orchestrate all of that is you have to think through. And I think the starting point there is customer journeys. Yeah. The starting point is not that, is it expensive for me? Can I do it? Is it risky to do it? Is start with the customer. There is a journey. He has a problem to solve. Map that out. Then the rest of the infrastructure then supports that journey in the easiest, the most effective, and in the most emotive possible context. If we are able to pull that down, it does not matter whether there's a new term called open banking or there's an old term called digital banking. You can actually just get all of that done. Now, the other point is then you can't even take multiple of years trying to develop this, and therefore this entire DevXOps, DevSecOps is old hat now. Is you need to have an agile way of working, and agility, part of it is obviously setting up CI/CD pipelines and getting the appropriate tooling in place. I think the bigger thing there is culture, which is that you have to convince the business folks and the IT folks that life is a series of minimum lovable products, which means that you always have a backlog of new features that you want, and they will come fast, but there has to be a stack rank of how you will force rank which feature has to go on, and there's some stuff that is inviable. I mean, it has to be minimum lovable, right? So you got to get that product out and then be ready for the next set. And it also means a lot of collaboration, not just force ranking, which means that your UX guy, your UI guy, your security guy, your infrastructure guy, your business guy, and your application guy are in a room together, and the coding stuff as and when it keeps moving through your continuous implementation, continuous delivery pipeline. So there's a cultural aspect to it as well. And if someone thinks that it will stabilize, my sense is we are just at the cusp of the next round of disruption that's happening there, and therefore there is no go but to evolve onto these new ways of working.
Right. Right. Now, Mr. Chatterjee, today there is a need for a platform where the risk and digital security measures are inbuilt to freely extend and roll out new digital services. So the focus of the platform must be to elevate digital experience in an omni-channel way across the various lines of business, and also to automate the middle office and the back office operations on the same platform. So how are you dealing with this challenge?
This particular middle office and back office integration, this is of course, this is something that this core banking, which actually has started somewhere in 70s, we are in the now in the age of 20s, and from the 70s 80s where we are now, it's not actually meant in that way. But in nowadays the things are in such a way that we have to think of these kind of scenario wherein I cannot also give load to my core banking. My core banking is somewhat just for the because my data size has increased, my records have increased. It's a huge challenge to maintain that core banking. So one way, when you have to transform the core banking, at the same time you have to also cater to the user's needs with the agility. So there is a need of the technological leap from the older scenario to now a present scenario. Maybe one has to like the way we are also thinking that from a classical way of providing the MIS, we are now going for a data lake, or already data warehouse we are having. So next step will be to go for a data lake kind of scenario, and also wherein the load on the core banking has to be dissipated. It cannot take that load of giving the whole MIS plant and all this. So we have to bring a data lake kind of scenario, rightly integrated with CRM, so that my customer experience will be driven by AI ML built-in kind of a platform wherein the decisions can be made, wherein the customers on the fly can get the intelligence of their need and of their whatever they are actually need that banking service. So this efficient way of integrating my core banking, my middleware, my backend, everything, it's a journey again. It's a journey, and it is something we are on the right track, because we are also on the part that okay, we are digitally enabling the integration. We are API integrations, and then the ESB kind of integration we are having it, so that my integrated architecture with the right set of framework, with the backend and the middleware, we can able to the actual user I mean the UX kind of the most efficient UX we can provide to the customer.
Right, right. Now we'll wrap the session up with closing comments from all the panelists on this one question. We spoke about the cultural aspects of integration. We also spoke about the talent aspect. I think Mr. Johorey raised it in one of his responses. Now earlier the implementation within banks was all about implementing it with a partner, stitching it together with a partner and trying to integrate it. But now banks are focusing towards co-creation with partners, partnering with fintechs, owning the IPs. So what is the approach that you suggest to the banks? What is an ideal sort of an amalgamation where the cultural aspects are taken care of, the talent deficit aspect is taken care of, and there is a creation? Do you suggest an approach like an enterprise factory approach, or do you suggest something like a co-creation of parallel fintechs within the bank? What is the right approach to deal with this challenge?
Yeah.
Mr. Chatterjee, if you can, Mr. Johorey, if we can start with you.
All right. Okay. So, the term that we're using internally is called the bank of platforms. Yeah. Is do not invent what has already got invented. Yeah. Is incorporate that. And the reason why I'm using the term platform and not application is we are graduating away from a bank of applications to bank of platforms, which means that, ultimately, I mean, if we could have our way, we would actually have just 5 platforms which converge to the systems I was talking about. Yeah, engagement, intelligence, and stuff like that. We're still a little way away from there. Is converge into a platform, because what a platform does is it gets innovation very, very rapidly because there's several parties using the same stack. Yeah. And this is therefore largely application service providers, but make sure that you actually get the best of breed, and therefore you get performance and security, and most importantly a lot of innovation, because the world is actually innovating on this platform. So that's the first part. The second part is there has to be a very, very strong value assessment of the value that you hope to get by whatever initiatives you're taking. Yeah. And essentially it boils down to, will it increase your revenues? Will it lower your costs? Yeah. Obviously the elements of risk, the element of customer satisfaction, ultimately they boil down to just these two. Yeah. In the medium term, it should result in ideally both. Anything that you do should increase your revenues and lower your costs, because ultimately that is what is going to fund your continuous innovation. Yeah. So look at it from these two lenses and then do the appropriate things. One is, do not invent what has already got invented. Add value to what is new and do it through a series of these minimum lovable sets. Yeah. The second one is, the only lodestar you have, the only true north you have is value. Yeah. And that is a science and an art, and obviously part of it is anticipation, that you can design that we will get so much and we will not, we will do it with so much less. But the trick there is to get your leading and lagging indicators right. Yeah, because your balance sheet and your P&L is always a rear view of what has already happened. Yeah, you got to look at, when you're driving, you will got to look at the front shield. Yeah, and that is where your leading indicators will start talking. Yeah. Leading indicators start with the kind of traffic you're getting on your properties. Yeah, the kind of engagement that you're getting on your properties. Your economic value will follow. But if you do not get these two right, if your funnel shapes don't start changing, which is, the traffic that is coming to the traffic that is engaged to the traffic that actually wants to deal, with you, if that is not a cone, continues to remain a cylinder, it does not matter how shiny or chrome your technology is. Yeah, I mean, you just wasted money. Yeah, ultimately your initiatives have to be backed, by, and therefore that leads to a business model. Is how will you make revenues? How, at what cost, and performance trade-offs would you make? Yeah. So a lot of it, I mean, a good strategy is not what you do. A good strategy is what you don't do. Yeah. So do not do these two things. Yeah. Do not invent what's already got invented, and be guided by value. I mean, if you get these two broad themes right, my sense is you set up for success.
Right. Thank you, Mr. Johorey. Mr. Chatterjee?
Yeah, I think Mr. Johorey has rightly touched. I mean, do not repeat whatever you already have it, which doesn't have the value addition, by just going for a sake of fintech. So actually, to me, the parameters which we should see from the partnering with the fintech is actually achieving is the strategic objective of my digital innovation and growth. I should not go with the, actually this should be very well, it has to be, gauged. We of course, for this one has to have the fintech policy which should be in place. We should not just rampantly go for anybody hiring and having the partnership. It should be a policy driven, which is, that it has to be faster to go to market, right kind of engagement we should have. Then the commercial consideration models are also very important to consider. So that this because nowadays the fintech companies are like that mushrooming in the market. I mean, you just cannot, because everybody is coming out with some technology stack and say that we are providing this and providing this. But for a banking kind of scenario, and which is the right kind of profitable, because we have our security point is very, very important for the bank to come. So I think we have to actually analyze this from a very, that practical point of view, that okay, my fintech should give a value addition. My fintech should give commercially, it should be viable. It has to be secured, and it has to be with the right kind of architecture. So that's my takeaway from it.
Right. Rubal, basis your experience in the industry and what you've been hearing from your customers, what do you think would be the right approach?
So thanks, Sneha. I guess again, great points by Mr. Chatterjee and Mr. Johorey. I'll just build up on what Mr. Chatterjee and Johorey said. Right. See, according to me, there are 2-3 aspects here. First is first mover advantage, right? In partnerships with fintech or any other, association, because today in silos or with just our business models, we cannot grow and expand. We have seen various other models, whether it is in telco industry and all, where the competitor itself have joined hand to set up a tower company. Correct. Right. Same way, every industry is taking cue from each other industry and each other players, or in different countries for that example. That we have to be ready for to embrace the change, and at the same time we have to be ready to do that partnership. First mover advantage is very, very important. That can only happen when we have a platform approach, the platform which has low code, no code also embedded into it, so that you can quickly bring out MVPs, minimum viable products, into the market, test it out, scale it, and at the same time it should be reusable in nature. So that if today my innovation is taking 3 months, I'm building a technology stack, partnering with some other fintech player, and it's today is taking 3 months, the next time it will only take 1 month because I'll reuse it, right? And third thing is, how can, Mr. Chatterjee touched on a very important point of security. So the platform which I'm choosing should be very secure, enterprise in grade, and we should not be looking at just the cost aspect, but we should be looking at the longevity in terms of strategy, that it should be there for next 5 years, next 10 years at least, and you can build on top of it. Correct. So these are the points from my side on partnerships with fintech. Thanks.
Right. Thank you so much, gentlemen. Thank you, Mr. Johorey. Thank you, Mr. Chatterjee, and thanks, Rubal. You gave us a very comprehensive view on some of the technology aspects, the strategic aspects, and the business value aspects of digital integration and how it should be done. We covered a lot of ground in terms of the technologies that need to go into this, and how they support the the business imperatives. Thank you so much for your insights and for taking out time for this session. Thank you.
Welcome.